Welcome to Java. Thank you kindly for joining me. It's June 13th, 2025. It is also Friday. My apologies for not being able to make a video yesterday, and there's quite a bit going on. So, of course, major updates from overnight. We've got a few things coming in from the crypto sector, but the large story dominating all of the headlines is that Israel did some strikes on Iran last night. So let's take a look at what's going on in the markets at the moment. After they tanked last night, they're already beginning a bit of a recovery. So always market overreaction. Right now, 61 on the fair grade meter. That might drop a bit as it generally does, but I expect a bit of recovery as well. Possibly not to as much as yesterday. Now, the daily driver is risk off. Definitely anxiety due to this war that's coming out. So Iran is vowing a painful response after this attack. Now there's talk about closing the Strait of Hormuz. If they do, that is what is shooting the price of oil up. That would hurt trade massively between several factors. But they are also kind of chiming in on claims that they would also retaliate to the United States, although it's not very clear in how they intend on doing this. So, really, what's going on is this a shock to the market that even since last night, it's already beginning to recover. So, from yesterday going near all time highs, and this kind of bounced it back down as the market does tend to move around. Now, with all of this happening, the more interesting things are what is happening with the dynamics behind this. Now, everybody knows the dollar is weakening. It's having serious issues lately, but it did show sign of safe haven status after these bombings came out. What does that mean? That money flowed back through the safe haven, quote unquote, or risk of trade. Now, cryptocurrencies got hit lower. Oil spiking on this because it is Iran. They're one of the largest producers. And then we've also got money that went into the 10-year yield. So that is showing significant difference as well as the dollar gaining that strength. Cryptocurrencies weak, as I said. Stocks also took a serious hit. Doesn't show on here, they weren't open at the time that I did this, but the futures are dropping, of course. Gold also getting back towards the all-time high, watching 3,500. Now, I don't think it will hit there today unless there is continuance in this war. I think that if this is all that there is that has happened, at least for the moment, it should stabilize. Um, Typically, when it goes to severely to one direction or another, it tends to go back to the neutral. Now, not financial advice, of course, but let's dig in a little bit more. So, calendar wise, we're not getting a lot today. So, it's purely headlines and what's going on here. We have Jeffrey Gundlach saying that gold is no longer just for lunatics. And he says to wait to buy the 30 year. So, we did have bond auction sales of the 10 and coming up with the 30 year. So, the 10-year did really well. And with this, it also kind of pushed a lot of capital into it. Now we got another Boeing incident, of course, that has hit Boeing Airlines. But along with this crash, it was Air India. They're investigating, of course. But we've got with these strikes last night, airport closures. And so this is going to take the other major airlines down with it. They're cancelling flights as these air closures have halted. So that's going to cost them all quite a bit. So we've got this typical rush to safety going on. And I think it's important to take a look at where the money is flowing to and into the commodities because this is the safety trade. And I believe that we're about to see this in a deeper and longer term move. So as this corrects, this is what we're going to see. The one exception could be that not so much will be going back into the dollar, depending on the time period. So we've got defense stocks, of course, up on this because this is just wonderful for them. The likes of General Dynamics, Raytheon, Lockheed Martin, because they're all going to make a ton of money on all of this weaponry. and war, it does drive their machine, as well as the oil, which does drive the military industrial complex. Now, the United States, even if they are not directly involved, they will be expected as a support mechanism for several countries in the area. So those will continue to grow. We're going to see the oil effect on this economy if this is sustained. And what do I mean by this? Oil per barrel shot up over 20%, hit above $75 per gallon. If it hits $80 per gallon on this sustained effect, it is going to hit inflation, is going to increase rapidly on production of goods. I also believe this is going to put the euro into severe trouble as it's going to hit Germany because they go on the cost of their energy for their production. So we'll watch for that going forward. In other news, we also had Chime Financial. Now they're an online only kind of banking service, and they are debuting on the NASDAQ. So that just shows the shift going on to this digital. We've also got what's going on tomorrow is a weekend military parade in Washington, and this is for the Army's 250th anniversary. They're expecting protests there by a group called No Kings, but other stuff going on. The airway is closed there, so Reagan National Airport fully closed for tomorrow. So if you had any flights there, I'm sure you're rebooked by now. But we've got a lot of things going on, and now they're watching this as well. So a couple of other things I wanted to speak about is the direction all of this is heading, of course, is into the digital so that they can control this much more easily, or in their words, manage it. But managing it is putting it under control because it's not you managing it, it's them. So key difference there. We've got Coinbase wanted to speak about this, talking about a cryptocurrency credit card with a rewards card teaming up with American Express. So on the other side, we've also got Amazon and Walmart talking about issuing their own stable coins. They don't want to pay the fees of Visa and MasterCard, so they're kind of going it on their own on the other side, but these stable coins are going to be taking over these functions. It's only a question of whether these larger companies can kind of shift and go with. I believe they will, so there's some very definite restructuring going on in the background. Now, we've got the Financial Stability Board. I wanted to bring this out yesterday, but was not able to. Sounding the alarm on growing risk of the crypto sector, and the reason is because the market cap, this is just stable coins, which is a misnomer in my opinion, but those alone, $251 billion of value, and this is looking between 2021, 2025. And this points out the risk and what we're really watching in the background, because you might say, oh, sure, stable coins, but I'm not really in that anyway. But this is going to affect the broader financial landscape, if you will, because this could lower 3-month treasury yields 2 to 2.5 basis points within 10 days, while outflows could raise the yields by 6 to 8 points. Now, everybody's bantering over whether the Fed is going to raise or lower the interest rates, and this is just a little bit of a window into the fact that it doesn't really matter what they do because there are external forces that could really play their hand on this and trump anything that they would do in the first place. So between this, and this is only a smaller portion of it, but it's rapidly growing on an external scale to where other things are dictating these rates. So we are going to see lower rates eventually. They are going to print one way or another. So moving over to Bitcoin, treasuries may crack under price pressure. And then with everything happening last night, there was, of course, price failure. Now, It's a little bit odd, but this was kind of showing in the charts as well, if you believe in technical analysis, that Bitcoin was becoming a bit overpriced for this period. So this failure, they're saying, risks the end of the uptrend at $112,000. And then also looking at the lower end, somewhere about 101,000 price per Bitcoin. But not, again, not financial advice. You have to do your own research, but it looks to be that that is playing out. In the more interesting part is how the money flowed now. While a lot of it did flow out of cryptocurrency as well, Bitcoin not so much, less than 1%, much less than flowed out of the equities, or as we call it, stock market. So that's an interesting little bite that you might want to think about. All of this heading towards this bout of control. So with all of this, wish you a wonderful trading day. I'll do my best to see you possibly on Sunday. So with that, my friends, until I see you again, resist.